Neo is pushing, markets are pushing. Is there no end to it all? Will Nasdaq go straight to 25,000 and will Neo just continue upwards? In the $1,000 challenge where I try to grow $1,000 as fast as I can, $1,000 has become $5,555 after Neo ending yesterday on $7.89. You are listening to the StockInvest.us podcast Trading Tips with Jim, where I, of course, is Jim. During the podcast, which will be a short one because when I woke up today, I was very unmotivated and still am. Probably a little bit tired of since it's getting to the end of the week. And that brings me to the very first lesson. If you are tired, you shouldn't trade, especially not day trading. That's a situation that guarantees will make you make a lot of mistakes. You should be razor sharp. You should be in it like you are in any sort of sport if you are day trading. If you are not motivated, you will get in too late and out too late. FOMO, fear of missing out, will be much higher than when you are crystal focused. And when you are focused, you should do the following. You should have a strategy. You should use stop loss. You should aim for support resistance when you buy and sell. You should know your technicals. Anyway, I woke up very unmotivated. As I said, I'm still unmotivated, so it'll be a much shorter podcast than normal. Anyway, I will quickly guide you through what I think will happen next week, along with the update of the $1,000 challenge, of course. And in last week's podcast, and this time I record on Friday, so we don't get the full Friday, I said I thought it would be a red week during the week, not by much, because there is so much support below, but red. And AI, which I used, said that it would probably be green. And right now, Nasdaq is up 1.6% over the week. Seems like there is no end to it, and if you look at the chart, it's just amazing. It's such a compact, nice trend line, and as I said, there is a high chance that Nasdaq will just go to 25,000. I expected a small correction downwards. Was not possible to say exactly where it was, just a total natural reaction. It had a few days and then just bounced up again. And in this scenario, you cannot say, because it needs some sort of brutal event, the black swan event, to kill off the very good trend the market's in. So it is actually much higher chance that Nasdaq, especially Nasdaq, will continue upwards and just push upwards, and it maybe follow all the way through Christmas. And as I said, I would not be surprised if it hits 25,000. That, by the way, was my tip when the market was 19,000, when the tariff and all these things. I told you I buy for whatever I have. I put in, because in my opinion things will turn and they will go maybe up to 25,000, and such a journey it has been. Right now I'm slightly reducing a little bit because I do not want to sit too exposed in the market. And while there is no really big economic news next week, there will be some Fed talks. There will be unemployment number, but really nothing big. It all comes down to geopolitics. That is maybe the big black swan, because right now all analytics been wrong. They have said that US economy will go straight down the toilet. Every number will be bad, and every number has been better than expected. But you heard it first in this podcast. And if you want to keep hearing it, you have to subscribe and hopefully like as well, because as I told you, when it came to GDP, I am pretty sure that GDP would come in higher than expectations. Everyone had a moderate to very weak expectation, and it was revised heavily upwards, because all I see, all the bigger lines tells me that unless we hit a major global conflict, and sadly that is still high up on the agenda, I think this decade will be a decade people will remember in a long time for the Western Hemisphere. First off will be US, that will again pave a huge way upwards, and then Europe, which sadly has become what it is, Will not get into politics, but Europe will also slowly change. Will take some more time before Europe gets rid of all this wokeness, all this stupidity, and start to get back on track. US will be first, and most of you trade at Nasdaq, and this podcast is mainly about US markets. So I think, and I said that over and over again, I think we can be in for an amazing run. Of course, there will be corrections. This is just natural. Correction will occur. Right now, market is very highly priced with huge expectations, meaning that the professionals, they think, despite whatever you read in the media, they think that the US economy will be stronger, that the company earnings and everything will be stronger in the future. And they use a lot of things to come up to this conclusion. One of the very easy things I use to arrive to a conclusion is looking at the oil price. Oil is down at 61, and why is that good? Well, it's because it is the cost of energy, and energy being, as I said over and over again, one of the absolutely main components in everything that has to do with prices. Low oil price is simply good for all economies except the Norwegian one. Anyway, Norway had election, and that election went as south as you can go. So Norway will have to struggle with that for many, many years ahead, unless there will be a change, of course. Which means that the Norwegian krona, for instance, will weaken. It has been weakening over years, given the current government, the prior, which still is the current one. And it will just continue. I will personally not be surprised if we will see euro up, around 14 against the Norwegian krona, which good for me, of course, which lives abroad, but not very good for anyone inside Norway, except the export. Will be good for the export. Anyway, low oil price is super good, and while remembering, I am in a lot of dividend stocks, mainly Norwegians, actually, a few abroad as well, but mainly Norwegian. And these are oil tankers, etc. And I told you, I believe there will be a lot of economic growth, meaning that there will be high demand for energy, and that will push the rates or keep the rates very high. So far, being correct about that. I believe oil will continue downwards because Trump is saying that cost of energy should go down. He will work for it, and I think it will happen. It's a very good thing for Germany, which absolutely is struggling and getting deeper and deeper into the mud. And even now, Germany themselves says that maybe it's time to wake up. Gold keeps pushing $3,883 for the gold. Anyone following the podcast know that I bought gold when it was 1,600. I sold just under 3,000, saying that I believe gold will go to 3,500 for sure. But I sold to use all that tariff scare to get into NEO, more into NEO, more into Nvidia, more into Tesla, and a few other stocks. So, looking back, gold is now almost 30% higher than when I sold it, but the investments into Nvidia and into Tesla has almost doubled up, more than 80% both of them. So it's still correct, but it's a little sad to see gold going as much, but sometimes you just have to make your priorities. There is one thing I do not do, and one thing I would recommend you not to do, is use gearing. I use the money that I have when I trade. I don't use geared products. I could have stayed in gold. I could have used gearing to buy both Nvidia, more of Tesla. But I've been so long in the game that I know that out of the blue can come something, and markets may fall extremely fast before you're even able to turn around. And that is maybe a very, very, let's put it like low risk approach. And everyone says that you should take risk, you should go hard in. But for me, it works. It works very well. I sleep very well at night. I don't care if markets bump a little up and down, because at the most I can lose what I have in the market. I cannot lose anymore. And I'm in no position where I have to sell, because that, my friends, that is the one way that you will guaranteed lose money. If you're in trade products, in geared products, I mean, something happens, most of you will be forced to sell, and you will be forced to sell with a heavy loss just to see the stock go up. Most of you probably saw that happening during the tariff scares, for instance, or as long back as when COVID hit the market. The 10-year treasury yield, which is one number that is easy to follow, is at 408, keeps falling, and it's another sign that the professionals, they believe more and more in the economy. When this number go down, markets usually go up, and it just seems like it will continue downwards. There is one other thing that I like to watch, trying to figure out what will be in the week ahead, is the buy and the sell signals. So we have the chart, but if the buy and the sell signals are way too high, it can indicate that the market is overbought or oversold. And I've used this every time they peak, I sell, and every time they are too low, I just buy for whatever I had. Right now they are so average that it's hard to say anything else than average. Nasdaq is at 20% buy signals. That indicates still upside on several stocks at Nasdaq. Actually, Nasdaq is the one exchange, together with National Stock Exchange of India, showing the highest potential for future gains, meaning over the next few weeks. Across all the tickers that we analyze, 40% is giving buy signals. It is high, but not overly high. Usually around 47, 48, it starts to become somewhat scary. New York Stock Exchange 35, London 37. All of these are up since last week, because last week was a bit down. The market also was a little bit down, so it's very, very natural. The rest of these are, as I said, they are so normal. It's so average, it's hard to say. Shenzhen, China at 29. Tokyo 23 indicates that there can be a rebound in Tokyo last week. It was 53 the week before, so having a drop in Tokyo was expected. These are just saying that there is nothing in the signal saying that the market should fall, and the trend, as I said, is just stupid. Let the trend be your friend is one of the most reliable slogans that you can use, and actually a small knowledge tip that you can use when trading. Trends usually stay. It's when they are broken that is when you should sell, but as long as they stay within the trend is marked with trend lines above and below, you should just keep within that. And very often buying at the bottom of the trend is where you want to buy, and of course if you are a short-term trader, you sell at the top of the trend with the expectation that it will follow the normal which it has over a long time, and then go a little down. Even being in the top of the trend, in a rising trend, you can still make money, because it could fall 3, 4, 5%, and you can rebuy a little bit later. That brings me to close to the $1,000 challenge. There was one more thing I wanted to say, slipped my mind. So I mentioned that I think it has to be a black swan event, something big outside that will cause markets to fall heavily. I believe that will be geopolitical in the short term. In the long term, there is for sure an AI bubble bubbling. I think maybe that the AI bubble will burst when Nasdaq is around 25,000. I think we are far away from it yet, at least month-wise, some months ahead. But there will be an AI bubble where all these AI companies will suffer heavily and hard. And this is a long-term tip and advice. When it happens, be very patient. It's easy to jump in, but be very patient. There will be very few survivors when this rattle the market, the AI market. Be very patient. Let it fall the time it will fall, and then pick them up. Because most of the AI companies today, they do not make money at all. They lose billions trying to get market shares, trying to be the big one. At some point, there will not be enough liquidity to put in. They reach their highs. You cannot expand the stocks more. They have to start lowering the price to attract investors, etc. And you just get into a very, very bad spiral. Companies like OpenAI, which had such an IPO of higher than SpaceX, I believe it was $500 billion evaluation for OpenAI, overvalued. They have to afford this. They have to be evaluated for this value. They have to perform insane, and there are so many competitors. Just to give you a slight comparison, a Norwegian company went out, Atlantic Sapphire, went out and built land-based salmon farming, I believe in California, and everyone was saying this was the future. Stock price went heaven, but I've been working in the salmon industry. I knew what was waiting for them, and now there is nothing left of it. Simply because they were never able to reach the productions that they said they would, and the costs were higher. And it's the same thing with AI. When you do a prompt today in any AI, you are doing it with super discount. Actually, in most cases, the companies subsidize you when you do a prompt because it costs much more than what they get back. When you have a $20 subscription in OpenAI or wherever you have it, Claude, whatever, I don't know, you burn through much more than $20 if you use it a lot. That's just the cost of AI. But they want you as customer. They want to build as big customer base as possible to get the sort of evaluation that OpenAI got, to get the money. But what happens when you build a monster and there is no money left? You have to scale off. It will come. I'm very, very certain about it. And when it happens, when this shakeout will come, I can guarantee you one thing. When the dust is as heavy as it can be all over the place and everyone is screaming sell and hammock and everything because it's such a bad, I will sit there, I will transfer money to the trading accounts, and when the dust is slowly starting to settle down and everyone thinks that it's over, I will buy it, because in the future there will be some real AI companies. Will this affect NVIDIA? I don't know, because NVIDIA is selling chips, not doing AI generation as such. I believe heavily in AI. I'm just saying that they are overpriced right now. The black swan, so that will come at some point when all these AI things starts to rattle down. It will send a shock in the stock market. But before that, it is geopolitical issue that can rattle everything, and it is such a high chance that it may happen. I read before doing this podcast that Putin says that the West should be aware that Ukraine might send disguised soldier into Poland to try provoke a situation. And when this is being said, it means that it actually is a high chance. It's called false flag operations. You can argue that it may not be, or it is. We remember Nord Stream that was blown up, and of course Russia was blamed for that. Turned out later it was a drunk Ukrainian in a sailboat, for anyone who believed that sort of story. And anyway, we can get things happening. So again, maybe be a little cautious about being way too exposed into the market. I see that I managed to talk a lot, and I hope it was some sense in the things that I said. $1,000 challenge, very simple one. I try to grow $1,000 as fast as I can, and over the last few weeks I said when NEO hit 8, we might just have to do something, and NEO hit 802. Falling a little back at $7.89 right now, meaning that the $1,000 challenge is $5,555.02. That is how much we have managed to grow it. There was a lot of tickets before NEO. NEO was bought at $5.10, and I said that I so strongly believe that NEO is undervalued. I gave all the reasonings why, and we've been sitting so patiently. NEO was down at $3.60, and I said I don't know exactly when it will go, but it will go. Luck. Maybe, I don't know. Now it is up 54.71% the trade in NEO. I am absolutely ready to go out of NEO, but the thing that I struggle with is the same thing I struggled with the last week and the week before, is that I do not see any real good candidates which I want to replace NEO with, meaning that I think there is higher chance that NEO would go up than any other stock would go up. So I will just sit in NEO for one more. But for anyone who has been following this podcast, took up on the tip to buy NEO when I said it is such a good buy. Personally, I have invested heavily into NEO. The biggest position I had in years in any company. I bought NEO. I bought NEO at several occasions, trying to find the best average I could, and I got into a very nice average, meaning that I started to buy even long before the bottom came. I bought $6, I bought at $5, I bought at $3.40 or $50 or whatever it was when it was at the lowest. I bought a little more at $4, having a super nice average, personal average. And that is how I do it. That is how I did it when COVID was hammering. I didn't know where the bottom would be. I just started to buy a little by little, averaging out. It's called dollar cost averaging. And you can do this strategy if you have, like I have some capital, so I can do these sort of things, and it gives me a better, I just have to know where I want to be. And right now, I see that NEO, well, I believe if markets fall, I think NEO will hold better than most stocks. And I don't see so many. There are stocks, of course, but you really have to scan the market. So sorry for anyone that was waiting for to buy into a new stock in the $1,000 challenge. And some of you may sit with the question, so should I buy NEO at today's level? I think NEO at very short term, and we talk week, next week, week over, the risk is a little bit too high. But if we look long term forward, I see NEO easily at $24, meaning that I think NEO will go 3 times from today's level. I believe that already Q4 we will see better profitability in numbers, and eventually they will go profitable, and we will see how that will affect the stock price. And I believe EV is the future, no matter what is said right now. We will move. We are already moved quite fast in that direction. But should you buy or not, it will be up to you. Don't expect, if it will be short-term gain, super, but do not expect it. It is more like an investment than a trading candidate right now. If it drops back to 5 or 6, may very well happen. Then absolutely, I say absolutely, super trade. Hope you enjoyed the podcast. 22 minutes. Usually they are 30 minutes, so we saved 8 minutes. Slowly while talking, my motivation came a little bit more back, maybe because I like talking to you. Been doing this podcast for a very long time, and I know a lot of you listens to the podcast, and some of you learn a little bit, and some of you send me very nice messages that you have gained experience and have gained in your portfolio, have gained. And that is the only reason why I do this podcast. I want for you to have the best shot possible, and if I can teach you anything, it is super. Until next week, just have a super week, and hopefully your portfolio will be much greener by the end of the week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.